Welcome back to Boni's Life, where we decode the crypto markets with precision, passion, and just enough wit to keep you awake during those late night trading sessions. I'm Boni, and if you're watching this on July 14th, 2025, you're witnessing history in the making. Bitcoin has just shattered through $122,000. And frankly, if you're not paying attention right now, you might as well be using a flip phone to trade derivatives. Today, we're diving deep into what I'm calling the most critical 24-hour period in crypto trading this year. We'll dissect the technical triggers that got us here, analyze the fundamental forces reshaping the entire digital asset landscape, and most importantly, I'll give you a precise roadmap for navigating the next 24 hours of trading, whether you're a seasoned whale or someone who still thinks a stop loss is what happens when you drop your coffee. This episode will arm you with the intelligence you need to make informed decisions. But first, let's address the elephant in the room. Bitcoin at $122,000 isn't just a number on your screen. It's a seismic shift that's rewriting the rules of global finance. And if you think this is just another pump that'll fizzle out by next week, well, you might want to reconsider. The data tells a very different story. Let me paint you a picture of what happened in the last 24 hours. Because if you blinked, you missed one of the most spectacular displays of institutional buying power in crypto history. Bitcoin didn't just climb to 122,047. It demolished every resistance level with the precision of a Swiss watchmaker and the force of a freight train. From a technical perspective, we witnessed Bitcoin challenge and decisively break through the 61.8% Fibonacci retracement level at $121,357. For those keeping score at home, this level was drawn from the April 7th low of $74,508 to the May 22nd high of $111,980. The fact that Bitcoin not only tested this level but closed above it with conviction tells us we're not dealing with a speculative frenzy. This is institutional-grade accumulation. The relative strength index is currently reading 77 on the daily chart, which technically puts Bitcoin in overbought territory. But here's where experience trumps textbook analysis. In a genuine bull market driven by institutional adoption, overbought conditions can persist far longer than traditional indicators suggest. The MACD is showing rising green histogram bars from the zero line, indicating that bullish momentum is not just present, it's accelerating. What's particularly fascinating is the volume profile during this breakout. We're seeing sustained buying pressure across all major exchanges, with Coinbase leading the charge, a clear indicator that institutional money is flowing in through regulated channels. The options market is telling an equally compelling story, with call volume significantly outpacing puts and implied volatility remaining surprisingly subdued for such a dramatic price move. But perhaps the most telling indicator of all is what happened to the shorts. In the past 24 hours alone, we've seen $600 million in short liquidations, with $172 million wiped out in just the last hour. The largest single liquidation occurred on Binance, where one unfortunate trader lost $98.1 million. Michael Saylor wasn't joking when he said, short Bitcoin if you hate money. The market has been absolutely ruthless to bears. Now, let's talk about why this isn't just a technical breakout. It's the culmination of fundamental forces that have been building for months. We are witnessing what I call the institutional legitimacy cascade, and it's happening faster than even the most bullish analysts predicted. The timing of this breakout is no coincidence. We're in the middle of what the US House of Representatives has dubbed Crypto Week, running from July 14th to 18th. This isn't just political theater. We're looking at landmark legislation that could fundamentally reshape the regulatory landscape for digital assets. The Genius Act, which has already passed the Senate with a 68 to 30 majority, is poised for House approval. This bill would enable private companies to issue stablecoins backed one-to-one with liquid cash. Think about the implications. Walmart and Amazon are reportedly considering launching their own stablecoins. When retail giants with billions in daily transaction volume start bypassing traditional payment rails, we're not just talking about crypto adoption, we're talking about a fundamental restructuring of the global payment system. The Digital Asset Market Clarity Act is equally significant. This legislation would establish a clear regulatory framework involving both the SEC and CFTC, finally providing the regulatory certainty that institutional investors have been demanding. Coinbase has been so confident in this bill's passage that they've run a six-figure advertising campaign supporting it. But here's what really has me excited. The Trump administration's reversal of Federal Reserve restrictions on crypto in April 2025 has opened the floodgates for institutional participation. We're seeing the effects now, with 39% of family offices considering crypto investments and major corporations adding Bitcoin to their treasury reserves. BlackRock's influence cannot be overstated. Their IBIT ETF now holds over 700,000 Bitcoin. That's roughly 3% of the entire Bitcoin supply. When the world's largest asset manager is accumulating at this pace, it sends a clear signal to other institutions: Bitcoin isn't going anywhere. The macro environment is providing additional tailwinds that many traders are overlooking. The Federal Reserve's current policy stance, with rates in the 4.25% to 4.50% range, is creating a perfect storm for Bitcoin adoption. As traditional yield-bearing assets become less attractive and inflation concerns persist, Bitcoin's narrative as a store of value is resonating with institutional treasurers. The geopolitical landscape is equally supportive. With ongoing tensions in various regions and currency debasement concerns globally, Bitcoin's role as a neutral, decentralized store of value is becoming increasingly relevant. We're seeing this reflected in the options market, where long-dated calls are trading at premiums that suggest institutional players are positioning for much higher prices over the next 12 to 18 months. The European regulatory environment is also evolving favorably. While the EU has been more cautious than the US, recent statements from European securities regulators suggest a more nuanced approach to crypto regulation, focusing on consumer protection rather than outright prohibition. Let me share some insights from the smartest minds in the space. Because in a market moving this fast, you need to know what the real players are thinking. Michael Saylor continues to be Bitcoin's most vocal institutional advocate. His latest statement that Bitcoin is going up forever isn't hyperbole. It's based on his conviction that Bitcoin represents the apex monetary technology. Saylor's prediction of $13 million per Bitcoin by 2045, assuming 30% average annual returns, might sound outrageous, but his track record speaks for itself. MicroStrategy's Bitcoin holdings are now valued at over $73 billion, and they're showing no signs of slowing down their accumulation strategy. Bank of America has officially crowned Bitcoin as the best-performing currency of 2025, marking a historic shift in institutional sentiment. This isn't just recognition, it's validation from one of the world's largest financial institutions that Bitcoin has earned its place in the global monetary system. Standard Chartered's prediction of 200,000 Bitcoin by year-end is particularly noteworthy because it comes from a bank with significant exposure to emerging markets. Their analysis suggests that Bitcoin's adoption in regions with currency instability will drive the next wave of institutional demand. Coinbase CEO Brian Armstrong's recent comments about AI crypto integration, achieving a 10x unlock point to an entirely new use case for cryptocurrencies. As artificial intelligence becomes more prevalent in financial services, the programmable nature of digital assets will become increasingly valuable. But it's not just the crypto natives who are bullish. John Glover, CEO of Ledn, is targeting 136,000 Bitcoin by year-end, citing the breakout to new highs as confirmation that the rally has legs. When traditional financial services executives start making these kinds of predictions, you know the narrative has shifted. Now, let's get to what you really came here for: actionable trading intelligence for the next 24 hours. Based on my analysis of current market structure, here are the key levels and triggers you need to watch. For Bitcoin, the immediate resistance level to watch is $127,652, which represents the 78.6% Fibonacci retracement level. A daily close above this level would signal that Bitcoin has entered full price discovery mode, with the next logical target being the psychological $130,000 level. The momentum indicators suggest this move could happen within the next 24 to 48 hours if institutional buying continues at the current pace. On the downside, support has been established at $121,357, the level we just broke through. This should now act as strong support, with additional backing at $116,936, the 50% Fibonacci level. Any pullback to these levels should be viewed as a buying opportunity, particularly if it occurs on lower volume. For Ethereum, the breakout above $3,000 has been confirmed, with the next target at $3,067, the 61.8% Fibonacci level. The Golden Cross formation, where the 50-day EMA crossed above the 200-day EMA, is a textbook bullish signal that typically leads to sustained upward momentum. I'm watching for a daily close above $3,067, which would open the door to $3,525. XRP is approaching a critical juncture at the $3 resistance level. The breakout from the resistance trend line formed by the January and May highs has been decisive, and a push above $3 would target $3.29. However, with the RSI at 83, XRP is extremely overbought, so any long position should be managed carefully. Given the current market structure, here's my strategic framework for the next 24 hours. Remember, this isn't financial advice. It's educational content based on technical and fundamental analysis. For aggressive traders, the momentum strategy is clear. Buy any pullback to the 121,357 support level in Bitcoin, with a stop loss at 116,936. The target would be 127,652, offering a risk-reward ratio of approximately 1 to 2. Given the institutional buying pressure, this setup has a high probability of success. For more conservative traders, I'd recommend waiting for a confirmed breakout above $127,652 before entering new long positions. This would confirm that Bitcoin has entered price discovery mode, reducing the risk of a false breakout. The target in this scenario would be $130,000 with a stop loss at $124,000. For Ethereum, The strategy is similar but with different levels. A pullback to $3,000 offers an excellent entry point for long positions, with a stop loss at $2,746 and a target of $3,525. The Golden Cross formation provides additional confidence in this setup. For those trading altcoins, the key is to focus on projects with strong fundamentals and clear institutional interest. The rising tide is lifting all boats, but some are rising faster than others. Look for altcoins that are breaking out of consolidation patterns with strong volume confirmation. Options traders should consider buying call spreads rather than outright calls, given the elevated implied volatility. A bull call spread on Bitcoin with strikes at $125,000 and $130,000 expiring in the next week could offer attractive risk-adjusted returns. Let me be crystal clear about something. While the fundamentals are incredibly bullish, crypto markets can still experience violent corrections. The RSI readings across major cryptocurrencies are in overbought territory and were due for some profit taking. Position sizing is crucial in this environment. Even with the strongest conviction, no single trade should represent more than 2 to 3% of your total portfolio. The leverage available in crypto markets can amplify gains, but it can also wipe out accounts in minutes. Stop losses are non-negotiable. I don't care how bullish you are on Bitcoin. If it breaks below 116,936, something fundamental has changed and you need to reassess. The market doesn't care about your feelings or your conviction. It only cares about supply and demand. For those holding spot positions, consider taking partial profits at key resistance levels. There's nothing wrong with securing gains in a market that's moved this far this fast. You can always re-enter on pullbacks. What we're witnessing isn't just a price rally, it's the maturation of an entire asset class. The institutional adoption we've been predicting for years is finally happening at scale, and the regulatory clarity we've been waiting for is becoming reality. The implications extend far beyond Bitcoin. As the flagship cryptocurrency establishes itself as a legitimate store of value, it's paving the way for broader crypto adoption. We're already seeing this in the DeFi space, where institutional-grade protocols are attracting billions in total value locked. The tokenization trend that BlackRock is leading with their $12.83 billion in tokenized assets is just the beginning. When traditional financial instruments start moving on-chain, the entire financial system becomes more efficient, transparent, and accessible. Central bank digital currencies are also playing a role, albeit indirectly. The CBDC Anti-Surveillance State Act being discussed in Congress reflects growing concerns about government overreach in monetary policy. Bitcoin's decentralized nature becomes more attractive as these concerns grow. While this episode focuses on the next 24 hours, it's important to understand the broader context. The next 30 days could be pivotal for the entire crypto market, with several key events on the horizon. The completion of Crypto Week legislation could provide additional regulatory clarity that unlocks even more institutional capital. The SEC's new guidance on crypto ETFs suggests we could see approval for additional cryptocurrency ETFs beyond Bitcoin and Ethereum. Corporate earnings season is also approaching, and I expect to see more companies announcing Bitcoin treasury strategies. The success of MicroStrategy's approach has provided a blueprint that other corporations are likely to follow. The Federal Reserve's next policy meeting could also impact crypto markets. Any hints of rate cuts would likely be bullish for Bitcoin, as it would reduce the opportunity cost of holding non-yielding assets. As we wrap up today's analysis, let me leave you with some key takeaways. Bitcoin's breakout above $122,000 is not a fluke. It's the result of fundamental forces that have been building for months. The institutional adoption story is real, The regulatory environment is improving and the technical setup is as bullish as I've ever seen. For the next 24 hours, watch the key levels I've outlined: $127,652 resistance for Bitcoin, $3,067 for Ethereum, and $3 for XRP. Any breakouts above these levels should be viewed as continuation signals, while any failures to hold support levels warrant caution. Remember, in a market like these, the biggest risk is not being positioned for the move, but equally important is managing your risk appropriately. This is a marathon, not a sprint, and preservation of capital is just as important as generating returns. If you found this analysis valuable, make sure to subscribe and hit that notification bell. The crypto markets never sleep, and neither do we. I'll be back tomorrow with another deep dive into the markets, and trust me, you won't want to miss what's coming next. Until then, trade smart, stay informed, and remember, in crypto, fortune favors the prepared mind. This is Boni, signing off from Boni's Life, where we turn market chaos into trading clarity.